Recording started.
Okay, good morning. It's nice to see everybody again. It feels like forever since I've seen you. So today, we're going to do Chapter 5. And we're going to do the first half of Chapter 5 today and the second half on Wednesday. The thing I want to do before we do anything else is, well, I guess talk about what to do this weekend. So we're back to a normal schedule this week, and that we have attendance quiz 12 covering today and Wednesday due on Saturday. We have the Chapter 5 homework due Saturday, and then we have a video quiz 13 due Sunday over Chapter 6 videos. So that's just a normal, regular week. But before we do that, I want to talk about the exams, okay? And after I get through my spiel, I'll ask you for questions, so happy to take questions. But first thing is, if you want to see where your exam score fell in the whole range of scores, if you want to see, I think there were 550 exam scores, 551. You can look at this URL, http:/tiny.cc/exam1f13. Okay? So if you look at that, it is an Excel file. When you click on it, you usually need to if it doesn't open immediately, you need to right-click it and save as, and then go into Excel and open it up, sometimes just depending on how your system's set up. But it is an Excel file. It ranges from, it's sorted from the highest exam score down to the lowest, and then off in the left column is a ranking. So it's just listed 1 through 551. So if you want to see where you fall in that whole range of scores, that is there for you. The average on the exam was 75%, and the median was 75%, almost 76%. So right smack in the middle there. The range of scores on the exam ranged from a low of 32.5% up to 106.35%. Hopefully you've read your email from yesterday. I did add 8 points onto the score, so these are all after adjustment. So several people ended up with more than 100%. So if you've not read your email from yesterday, I advise you to read it. But so these are after the adjustment. And just to tell you, the number of scores, 90% or higher. There were 87 scores, 90% or higher out of, I guess, 552 scores. So about a little over 15% of the class got above 90. There were several in the 80s. So, and half the class was above 75%. So those are basic statistics on the exam info. And if you want that list of scores, feel free to look at it. Now, what I did here, I wanted to show you visually some things that have predict exam success. So this isn't really, I didn't want to get mired down with all kinds of statistics, but what I wanted to show you is the green bar. What I did is I took the top 10 scores on the exam. So I took that group of 10 people. They're the green bars we will see in the next couple slides. And the average of those top 10 people on the exam was 105%. I took the middle 10 scores. So I went to the 75, took the middle 10, and their average was 75, and that's the yellow bar. And then I took the bottom 10. So the average on the bottom 10 was 38%. And so I've got these three groups. So what I want to show you is I want to show you the homework scores of these three groups and the quiz scores and one other thing. Okay, so in the left, the first one is the homework. So in the top 10 group, the average homework score for those 10 people was 97. There wasn't a lot of movement for the middle 10 on homework. Theirs was 96, so it fell a little bit. But it really fell down for the bottom 10. The bottom 10 had an average homework score of 77, which makes perfect sense to me. So homework, you need to do the homework to be able to pass the exam is what that's telling us. Okay, next over. The next over is the average quiz score for the top 10 was 91%. For the middle 10, it was 69%. Now keep in mind, this is attendance quizzes. This includes pop quizzes, attendance quizzes, so you don't have to be good at taking tests to do well on the quiz. You need to put the time in. So 69% was the average quiz score for the middle group, and then 60% was the average quiz score on that bottom group. So the homework and the quizzes certainly correlate with exam scores. And then this next slide was the number of those 10 people in each of those buckets who used study plan. For the first group, and I'm not making a comment on how many hours or anything, but just how many used study plan. So in that top group, 6 out of 10 used study plan. The middle group, 2 out of 10 used study plan. And in that bottom group, no one used study plan. Okay? So what I did then was on Saturday afternoon, I emailed the people who scored in the top 5% on this exam. Okay? So I emailed top 25 scores on this exam, and I had just a simple question to them. I said, what did you do to prepare for this exam? Because I said, I want to share it. I'm not going to share your name. I asked for a couple sentences. I also said it doesn't have to be well written. So what I'm putting up now are quotes that I got between Saturday afternoon and early Sunday afternoon. So these are people that responded to me that were in that group of the top 5% of scores on this exam, because I just want to share with you what they said they did. These are copied verbatim, so if there's typos, they were in the original email, but I wanted to leave them like the people wrote, so I wasn't going to change the meaning in any way. Okay, so my first one, how did you prepare? So that was the question. I asked for a couple sentences. I prepared for the exam by reading the 4 chapters in the book. Then I watched the recorded video sections. Lastly, I did the majority of study plan. Okay, so we read the book and we did study plan. Okay, now, next one. I prepared for the exam by going through study plan and reviewing all my class notes. If I had trouble with the topic in study plan, I spent extra time on that. And then extra time becomes a theme as we see these as well. To prepare for the exam, I completed every chapter link in study plan at least once. Chapter sections I had difficulty with, I would repeat. Okay, and then this person filled out their exam sheet after they did study plan with what they didn't get. Okay, before the exam, I went through study plan and wrote down any missed questions. I removed some. This is getting pretty long. So again, study plan. So you're seeing these are the top 5% of scores. I basically prepared by spending hours and hours on the study plan. I made my reference guide based on the questions I missed during the exercises. So this is a common theme. I think I saw a study plan on virtually every one that was coming back. For the exam, I did the study plan for chapters 1 through 4 over and over. Okay, and the questions we asked in class. This one was kind of long, but I thought it was worth looking at. First of all, it's 8.5 by 11. Not 8 by 12, but that's fine. Okay, so study plan. After writing down the proper form for the financial statements and bank recs, so what they're saying is the things that I said in class we needed, wrote that down, and then I didn't decide what else to put on it until going through study plan. Anything the first time through study plan, I went back and did again and then wrote on the sheet. So you see a theme. People are going through study plan more than once with the things that they have problems with. I'd say of the top 25, you'll be able to look at the scores, but these people scored extremely well on the exam. Okay, to prepare for the exam, I practiced, quizzed, and mastered all topics in my accounting lab. Let's see. Okay, and this one, I make sure I get 100% on the homework. okay? 100% on the homework because you're going to see some of those questions show up on the exam, and then went through the study guide, so the exam reference sheet, the sheet where I said here's all the topics, make sure understood. Okay, went to class, did the study plan over and over. Okay. Okay, so that was the last of those. I got a couple more after this, so if you're listening to this and yours wasn't listed, it just came in after I got the PowerPoints ready. And so over and over, the theme I heard from this group that I asked how they prepared was using study plan, going back through on the problem areas, reading the book, things like that. It takes time. There's no real shortcuts to it. Now, okay, to see your exam. So let's say you want to see your exam. First of all, exams in this class are not cumulative, with a caveat here. The first three, especially the first three chapters, 4, but chapters 1, 2, and 3, even though I'm not going to put a question on the exam that's from chapter 3 or chapter 2, that material is fundamental to everything else in the course. We're going to talk about adjusting entries virtually every chapter, and those are back in chapter 3. So you need to know the material, but you're not going to see those questions again. So if you want to see your exam, the process, we've divided up labor just so I don't have a huge line in my office. Brian will go over your exam with you. Usually takes 5 to 10 minutes because what we're doing is we're going through and saying what kind of questions did you get wrong? Did you get multiple choice wrong, or did you get exercises wrong? Because how you study for those could be a little bit different. Brian will be outside my office in room 572. If he's going to be in a different location, there will be a note on my door saying what room number he's in. He will be there today and Wednesday after this class at 9:30 to 11, both days, and Tuesday 1:45 to 3:30. So if you would like to see your exam, you would see Brian during those hours, and so that's step 1. Step 2, you would come see me. And we can talk about your exam, talk about strategies for doing better. Office hours are that 9:30 to 11, 1 to 2, Mondays and Wednesdays. My office is in room 572. I'm happy to see you. I will say that your time to see me does not expire this week. So if you want to see your exam with Brian, feel free. I anticipate a little bit of a line because I've got some students that I really have to see that I've reached out to via email. So there could be a line. Don't get discouraged. Either wait or come back another day. It's not like today's the only day or Wednesday's the only day to see me, but you definitely want to see me within the next 2 weeks. We have an exam in 3 weeks. The reason the exam is in 3 weeks is the last day to drop the class is in 3 weeks. So that week that's coming up, it's only over 3 chapters, which is a plus. The amount of material is smaller, but I'm sure you're going to have a lot of exams that week because a lot of people have that same philosophy. We want to make sure you have a good sense of your grade before that drop date so you can make that decision if you need to. Okay, so now I'm done with my prepared spiel. Any questions? No questions. Questions? The next exam is over chapters 5, 6, and 7. So we have this week for chapter 5, next week for chapter 6, the following week for chapter 7. So I guess our exam's the week right after that. I think the drop date is somewhere around, don't quote me on this, but I'm pretty sure it's around November 4th or 5th, somewhere in that range. Okay. So that was the goal on that. What? Okay, no, Brian says November 5th, so. It's got to be the 3rd. It's a Sunday. Okay, so he doesn't know either. So, so anyways, but it's on the syllabus. It's on the calendar. Okay, any questions about anything before we go on? This probably isn't the best week for this, but I'll just keep bringing it up every week. I've had 56 people come to my office to meet me for the Get Out of Jail Free opportunity, which is about 10%, which is good. I would like that to be a lot more, and I also want to give you the opportunity. So just a reminder, today probably isn't a great day, just because I know I have other people coming. But just a reminder, see me before October 23rd in my office, 2 minutes, and you get to earn a do-over. If you need to at any point, you can do over any quiz or any homework, and you can save that up till the end of the towards the end of the semester. Mathematically, a homework's worth more than any one individual quiz, just if that's a strategy for you. But anyways, we have till October 23rd, so I'll talk about that again. If you're pressed for time and can't make any other time, know that the 7:45 class, we're out at 9. We're going to probably get out 5 or 10 minutes early today. So if you want to do it right after class before I go upstairs, we can do that too. Anyways, but yes, so thank you to people that have come. It's been great. I do know some names now, and it's nice when you email me, I know who you are. Okay. No questions. Just to get, you're going, we haven't had any accounting for a while. Can we just get started? Okay, so now, Chapter 5, Short-Term Investments and Receivables. So what we're doing here is, way back when we did Chapter 4, we talked about cash and internal control. But cash is the first item on the balance sheet. The next item on the balance sheet below that is going to be our short-term investments and receivables. So these are very, very liquid. They're not quite cash, but they're very liquid, meaning they're going to turn into cash soon. So we're talking about short-term investments and receivables. You had video lectures last night on this chapter, so we're going to start out with a couple questions. Okay. So the first question should be an easy question. It's 50-50 shot. Is short-term investments may be divided into held-to-maturity securities, trading securities, and available-for-sale securities. Is that true or false? What do you think? No, it's over here. Brian, what kind of do you have a lot of answers already? They're split. Well, let me see what do you think? You have 12 trues and 14 falses. Wow. What do you think? You're going true? Okay. We're going to start back up here. Okay, so what do you think? True? 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 True. True. Okay. What? 17 trues, 15 falses? I'm surprised this is so split. What do you think? True. True? You never thought I'd have to ask you a question. You're so far over there, right? You're not safe anywhere. What do you think down there? Probably true? Okay. What do you think? It's true. Oh, she says it's true. Okay, we're going to go with that. Okay. So that is absolutely true. So good job. I think the in-class did better on that question. Yes. Okay, so it was definitely true. Okay. Okay, so now I think I have another one or two here. Okay, now, next one. An unrealized gain occurs when a company sells a trading security. True or false? What do you think? False. False? Okay. Pretty emphatic here. False. Oh, look, everyone's telling me false. So what do you have online, Brian? Mostly? Or you just, okay. Yeah. Well, I have 100% false. Okay, and it is absolutely false. Okay, it is false, and the reason is when we see that word unrealized, it means the investment has not been sold yet. Okay, if you see the word unrealized, that should automatically trigger in your brain, this is not sold, this is market value or fair value. When I say market value, that's just a synonym for fair value. And I think that we have one last question now before we get into a homework problem. True or false? A company will have an unrealized loss if the fair value of the investment is greater than its cost. True or false? Okay, so what do you think on this one? False, okay. I haven't been over here. I'm going to ask. What do you think on this one? True or false?
False.
False, okay. False. That seems pretty emphatic. Brian, what do you have? Mostly false now? Yeah. Okay, on this one it is false. That is an unrealized loss if fair value is less than cost. So that was the tripper there, was looking at comparing fair value or market value to cost. If it's worth less than you bought it, that's a loss. If it's worth more than when you bought it for, that's a gain, an unrealized gain. Okay, so next I think we're going to do a homework problem. Okay, our first homework problem is exercise 5-21A. And we have Eastern buys 1,000 shares of stock at $57 per share. Assume they expect to hold the stock for 1 month and then sell it. So this is very short-term in nature. The purchase occurs on December 15th. At December 31st, the market price of a share of stock is $58 per share. Okay, so the first question is, what type of investment is this to Eastern? Well, when we look for clues, because we have 3 choices. We have held to maturity, we have available for sale, and we have trading securities. So when we look at those 3, right off the bat, those are our 3. That was the question we started off with here. When we look at those 3, the first thing I can do is I can eliminate, this is not held to maturity. Held to maturity is something that's going to be held for a while. We're not doing it. The choice then is trading securities or available for sale. Trading securities we expect to sell very soon, and that would probably suit this. So we'll call this a trading security or trading investment because they intend to sell the stock within a short time. Okay? So it is a trading investment or trading security. Now, the next question down, requirement 2. To record the purchase of the stock and the adjustment to market value on December 31st. So that's actually 2 entries. We have the first entry, which is the purchase of stock. So when we purchase stock, Jennifer, when we purchase stock, what's one account that's involved there? Stock. And is it going to increase or decrease? Increase. And what kind of account is stock? Investment. Okay. Yeah, they're purchasing someone else's stock, so that it's called investment. An asset. And how do we increase an asset? Because this is they're not issuing their own stock, they're purchasing a different company's stock. Okay? So it's just sorting through what's going on here. So we're purchasing someone else's stock. So it's an investment, which is an asset, and we're going to debit that investment. And then what are we buying it with? What's the other side of that? Cash, exactly. Okay. So I'm going to put up actually both of those right now. Okay, so the first one, December 15th, we're going to debit our investment, or short-term investment, for $57,000. And to get that amount, it's the 1,000 shares I bought at $57 per share. And I paid cash. So that was the purchase of the investment. Okay, now, I'll wait for you to write this down, and then I'll explain what's going on here with the second one. We're still writing in case you're watching this later. Okay, you're done, so I'm going to use your guide to being done. Okay, so the first entry we just talked through, December 15th, we bought the investment, so we have an asset. We bought it for $57 a share. We bought it with cash. Now, the second thing, if we step back for a minute, I know there's a calculation written up there. You can calculate it a couple different ways. If I look at what happened at December 31st, this stock is worth $58 a share. I purchased it for $57 a share. So it's worth $1 more per share, and I have 1,000 shares. So 1 times 1,000 shares is where that 1,000 comes from as well. So since it's worth more, I want to increase the asset for the $1,000, and I want to also increase unrealized gain on investment. Unrealized gain on investment is the credit there for 1,000. And unrealized means I have not sold this yet. I have it sitting there. It's a trading security, so my intention is to sell it very soon. And unrealized means I'm still holding it, and this is based on market value. Okay, so that's requirement 2. Requirement 3, show how they would report this investment on their balance sheet and any gain on the income statement. So that's just a matter of saying, okay, on the balance sheet, this would be shown under current assets at market value, the $58,000, and then the income statement under other revenues and gains will show that unrealized gain on investment for 1,000. Okay, so that's it on that exercise. So we're just saying short-term investments show on the balance sheet under current assets. They typically show right after cash. Sometimes short-term investments and accounts receivable can be flip-flopped, but they are right after cash. And on the income statement, it goes under other revenues and gains. Okay, so I think I have a question here. Now, this question, I want to do something. Today especially, I want to talk about strategies for answering questions. So this question, ABC company purchases a trading security for $12,000. So that's the event. That's the economic transaction that went on. The entry to record this transaction will include what? So I'm going to pause while you write that. So ABC company purchases a trading security for $12,000. The entry to record this transaction will include a what? Okay, on this question, what I want to do is say, because I've got a lot of questions like this today and Wednesday. There's a fairly short question, but then the answers are really long, and sometimes I think we get lost in the answers. So I just want to show you a strategy for this one. The first thing I do on this one is when it says entry, I would get rid of all those answers. Okay, I would say, okay, this is asking me for an entry. An entry says debit and credit. Okay, so we purchased a trading security for $12,000. I'm going back to Jennifer here. So what do we debit when we do that trading security? Because we just did one, right?
Yes.
Right, we debit the investment account, and what did we credit?
Cash.
Cash. Okay, so that's what this entry is. Okay, so notice I didn't waste my time reading all the answers, getting confused. I just know it's asking me about the entry. So I can very quickly jot down the entry. We're going to debit, we could call it short-term investment or investment, credit cash. So that's what I know. So now when I go back to this, now I can look at those answers, and there's only one answer. As soon as I see it, debit to investment account, that's what it was. So I'm done with that. I don't have to read all those different choices because I can tell from the question itself what it's asking. Okay. See what we have next. Okay, again, now this one I'm going to walk around and take answers for, but an unrealized gain. And I would tell you that you can think about what the word unrealized means and what the word gain means. Okay, so you have two words there, and then pick an answer. So I'm going to give you about 30 seconds to think about which answer you want. I'm going to walk around and do my poll, and then we'll compare to what Brian gets. Okay, so what do you think? No pressure, we want to beat Brian's. Okay, so what does unrealized mean? Anybody want to help him? What does unrealized mean? It's not sold yet. Okay, okay, so can you eliminate two answers, knowing that unrealized means not sold yet? Yeah, A and B. B. Okay, so there's your contribution, because now you've made it 50-50. Okay, so we know it's not A and B because it's not sold yet. Okay, so now, what does gain mean? If we talk about market value versus cost. If I have a gain, if it costs me $10, a gain is going to mean that it's now worth more or less than $10. More. More. Okay. So C. Okay. Brian, what do you have C? Like definitively? Okay. Okay. So on this particular one, just like what we just did, okay, we said unrealized means it's not sold yet. And how do we get a gain? We have to weigh cost against market value or fair value, fair market value. So a gain means that fair value or market value is greater than cost. So going back to our answers, we can eliminate, first of all, unrealized. So this question is great because there's only two real words in it, unrealized and gain. So the first thing we say is unrealized means it's not sold yet. And then we know that how do we get a gain? The fair market or fair value has to be more than the cost. So what we get on this question then, first of all, we can eliminate the A and B because it tells us trading security is sold. Sold does not mean unrealized, or unrealized does not mean sold. So we can eliminate those. So then the only difference between C and D is one's more than its cost and one's less than its cost, and we're talking about a gain. So what we end up with then for the gain is a gain is when the fair value is more than its cost. So that's how we get down to the answer. I know on these there's a lot of words, but sometimes if you focus on what the question's asking before you even look at the answers, you can eliminate a bunch of answers there because otherwise you start getting confused by what it's giving you. So really concentrate on what the question's asking before you look at the answers. Okay. Okay, exercise 523A. Okay, so this exercise, what we're going to do is we're going to, it gives us a list of transactions starting July 2nd. So we have to, first of all, record the transactions. So we have to write journal entries for transactions July 2nd, 10th, 12th, 15th, and 20th. And then the second requirement is to compute net sales. So we'll get to that. So we're going to focus on the entries first. So the first one, July 2nd. Let's talk about what this means. Sold merchandise on account to Aaron Bailey, $800, terms 210, net 30. Now, those terms 210, net 30 mean something very specific. The 2 means that's the amount of discount if she pays within 10 days. The date of sale does not count. Okay, so 2% discount she gets if she pays within 10 days. If she doesn't pay within 10 days, the whole amount is due in 30 days. Okay, so 210 net 30, that's how we pronounce that 2/10, N/30. Very common terms, 210 net 30. We can see 110 net 30, that's pretty common. Companies offer a discount for paying faster because it speeds up their own cash flow, and the faster you get the money, the less chance you have of the person not paying you. The faster you get the money, the more, of course, if you have it in your hand, then there's no risk of somebody not paying you. So, sold merchandise on account to Aaron Bailey, $800. Well, this is a pretty standard sale. When we sell merchandise on account, that entry is going to always look the same. We've done this before. We sell something on account. What's one account involved?
Receivable.
Receivable, accounts receivable. Is that the debit or the credit here? It's the debit, yes. I know you knew it. Yeah, that was your next guess, right? Okay, so what we're going to show here is we are going to show that we have, we're going to debit accounts receivable for $800 and credit sales revenue. Sales revenue. Now, I'm going to start pointing things out that are helpful to know. So I don't know if you want to like circle them or whatever. The journal entry for sale and account, there's absolutely no reason to memorize that. After a while, you'll get to just know it. But I would absolutely know this entry. This is a standard entry. You sell on account, you're going to debit accounts receivable, credit sales revenue. So if I'm thinking of things I might want to know for the next exam, these entries we're doing here, especially like this one's very, very standard. Probably all these entries here are standard rather than reinventing the wheel. Okay, so we have the first entry, July 2nd. We have accounts receivable. We book it. Notice we book it for the total amount of the sale, the $800 she bought. We don't know if she's going to take the discount or not. So we just book it. We say, okay, accounts receivable. She owes us $800. That's an asset. We're credit sales revenue for $800. Okay, so then we move on to the next item down. Okay, sold merchandise on account to Elise for $1,500, terms 210, net 30. Okay, so this one, absolutely, we should know the journal entry, right? Because we just did it. It's exact. What do we debit, Alyssa? Accounts receivable, and what do we credit? Sales revenue. See, so we know it immediately. That's what we always are going to do when we have the sale of merchandise on account. Okay, always doing the debit, accounts receivable, credit sales revenue. We don't take off a discount because we don't know if she's going to pay within the discount period or not. Okay, so next transaction down here. Okay, collected payment from Aaron Bailey for the July 2nd sale. Now, we look at this, and this is July 12th. The terms were 210, net 30. She bought it on July 2nd, so she gets a 2% discount if it's paid within 10 days, including 10 days. The date of sale does not count. So this one qualifies for the discount. Okay, so she's going to get a 2% discount. So 2% of that original sale, 2% of $800 is $16, right? So she gets a discount of $16. So she's going to pay less than $800. She's going to pay $800 less the $16. So what this entry is going to look like is, first of all, we're going to have cash. She's going to pay $784. That's the 2% discount off the invoice amount. Okay, we're going to, how I do this entry, if I were doing this from scratch right now, I would debit cash for $784. I would credit accounts receivable for $800. We have to reduce the amount she owes. We said on our book she owes us $800. She doesn't owe us that anymore, so we need to reduce it to $800. And then that discount gets put into an account called sales discount. Sales discount is technically a contra sales account, meaning it reduces sales. So I'm going to wait for a minute. I'm going to pause for a minute, let all the writing be done, and then I'll talk a little bit more about this. Okay, so what we're doing here, notice she pays the cash, which is less the discount. We remove accounts receivable because she doesn't owe us $800 anymore. So that sales discount is a contra sales account, which means it reduces sales. We just don't reduce sales. The reason we don't reduce sales is because it provides information to our financial statement users to say, this is our total sales amount, and this is how much sales discount we're giving customers for paying us early. That's a different sort of thing than sales revenue, so we just keep it separate. So sales discounts go into the sales discount account, which reduces the amount of sales. Okay, so that's the 12. Okay, so Aaron's paid up. Yes. Hold on. That's okay. You just have to say it so everyone can hear you.
I'm still confused on why you're subtracting 16.
Okay. So first of all, the $16 is her discount, right? I mean, so we're okay there, right? The 2% discount that she got times the 800.
Oh, okay.
Okay, so that goes back. We're good now? Okay, great. Okay, everyone else okay? Okay, so now we'll move on to the 15th. Okay, so now on the 15th, what happens here? Elise, okay, so from July 10th sale, she returned $500 of that merchandise purchased on July 10th. Okay, so she says, I don't want this, it's not right, or whatever reason, she's returning $500. When we return $500 worth of merchandise, what we're going to do is we're going to debit sales returns and allowances. Because again, we don't want to just reduce sales, we want to know how much returns we have. That's interesting from a financial statement standpoint. What were our returns? Why are people returning things? And then we want to credit accounts receivable. She returned the merchandise, so she doesn't owe the $500 anymore. Okay, so these are not too bad so far. When we talk about sales returns and allowance, that is also a contra sales account. It reduces sales. But we want to keep track separately of the discounts, which are discounts we've given due to the customer paying us early. And then sales returns and allowances are returns that we've gotten, or if somebody takes, let's say, the allowance part of that. Let's say somebody takes a refrigerator, has it delivered, and when it's delivered, they discover there's a dent in the side. So the customer calls into the store and says, there's a dent in my refrigerator, and the store says, well, we can either take it back and give you one without a dent, or we'll give you $200 off for the dent. That's an allowance. That's an example of an allowance. So returns and allowances have to do with customers returning it or getting some kind of allowance because of the merchandise itself. Sales discounts very, very specifically refer to discounts we give for paying early. Okay, so sales discount is a very specific term. It does not mean we're giving money off or whatever. They are reducing what they pay us because they're paying early. Okay, so then we get to the next transaction here. I'm sorry, I think I'm ahead of some of you, so I'm going to pause a minute. So our next transaction is probably the most challenging one of all of these, okay? The next transaction, we collected payment for the balance of the July 10th sale. Now we have to do a little bit of work for this one because notice it says balance. That's pretty key here. The balance of the sale, because she bought on July 10th, she bought $1,500 worth of stuff, right? But she returned $500 of it on the 15th. So her balance is $1,000, right? Now, to further complicate it, so we know, okay, so she owes $1,000. She paid it on the 20th. She bought it on the 10th with a 2% discount, right? So now we've got a discount involved too. So she's going to get a 2% discount on the $1,000 balance that she owes. So what we're going to have here, I'm going to put this down, I'm going to pause for a minute while you write it down, and then we'll talk through it. So again, I'm going quiet for a minute. If you're online, Ryan will tell you when I start talking again, because I'm going to wait. And I'm talking again. I assume you can hear me online, right? Okay, so on this one, what we're doing is, first of all, the easiest part of this entry to do, don't be afraid to do it out of order. The easiest part of this entry to do is skip down to do the credit. We know accounts receivable. We know she owes us $1,000, so we need to wipe that off. So that was the original $1,500 sale, less the $500 that she returned, so she owes us $1,000, so we'll take that off. Then, to figure out what she's going to pay us, she's taking a 2% discount. She's taking a 2% discount because she's paying within 10 days. The date of sale does not count. So she's making it on the 10th day, which is fine. So 2% of $1,000 is $20. So she's actually paying cash of $980. So then the difference is sales discount. This entry, every entry we've gone through here is a great model entry to have on that exam sheet to say, oh, look, this is when we return in something, this is what it happens. This one here, this is a good entry. Know that when we pay with a discount, you're always going to debit cash for the amount of cash received. You're going to debit sales discount for the amount of discount. You'll credit accounts receivable for the amount originally sold, less any returns. Okay, so what we have done now is we have completed requirement 1. Requirement 1 was to do those 5 journal entries. So we did those 5 journal entries. Requirement 2 says to compute net sales for the month of July. Net sales is going to be our total sales less those contra accounts. So less sales discount, less returns and allowances. So what we're going to see here, okay, write this down. I'm going to pause for a minute, and then I'm going to walk you through where every one of those numbers came from. But I'm going to put this out there first, pause for a minute. Okay, what we're going to do is we're going to walk through where all that came from. And the first thing that's going up here that's loading slowly, okay, this first list, this top part, you already have it. This is every journal entry that we just recorded. So July 2nd, 10th, 12th, 15th, 20th. They're just summarized there. So now the bottom part is that which you just wrote down. So the sales revenue came from the two. Gosh, I circled the wrong thing. This is one of those times. I know you're nodding. Everyone's nodding. Okay, so it looks pretty. So the circles, which I can't do anything about for this class, but I can certainly rectify it for the next one. Those circles should be the credits over there for sales revenue. It works out the same. It's just those circles should be over there for the credits. So the credit to sales revenue, the credit to sales revenue on July 10th. Okay, so that's where the 2,300 is coming. So again, telling you verbally to correct this because I can't correct it on the slide right this moment. And so, yes, I can correct it on the slide right now. This is going to bug me. Okay, so I am going to correct this just because I can. Okay, so we're going to go.
Time later.
Look at that.
But it's going to be. Is it going
No. I probably. We'll see what I did in the next one. Okay. Okay, so then.
Hi everyone. Or did you turn off?
No, I didn't turn off.
I'm live. From room 200.
Okay. Okay. It's mine again. Okay. Look, it's perfect now. Okay. So those are my two credits. Then my next slide. The next one down, sales returns and allowances. Thank goodness I did that one right. So we have sales returns and allowances, and then we also have sales discounts that came from those other two the other two journal entries, and then gives us our net sales revenue. There we go. Okay, so that's what we do for getting that one. So then we're going to, we're good on that? Okay, so we have completed 523A. Okay, let's do a couple questions. The allowance for uncollectible accounts normally has a credit balance. We haven't talked about this account yet. And I have the answer I wanted. Okay, Brian, how are you people doing? You'd rather not say. Well, I have my sample of 1. Right. Okay. Okay, so this is true. This allowance for uncollectible accounts has a credit balance. It is a contra asset, which means it reduces the asset. So we have accounts receivable, which is how much people owe us, and then we have this allowance account, which says this is how much I think people aren't really going to pay me. Because we can make sales, and we obviously think that people are going to pay us or we wouldn't sell it to them. But the reality is that people will be deadbeats occasionally, so we will not get paid back 100% of what we're owed. So we recognize that by setting up this allowance account. What? Deadbeats, yes. It's an accounting terminology. Okay. So that is true. Now if you've noticed, we've transitioned into accounts receivable here. Okay, so I think we have enough time to do this one. We've already done bunches of these transactions. Okay, so exercise 510. We have a couple transactions that we're going to record. The first transaction, all we're doing is recording transactions. That's it. So, first one, sales revenue on account. We sold on account. What's our debit? We sell on account. Yes, I'm not being fair. It's not on this page. You know, it's on this page before. Anybody know what we debit? Yes. Accounts receivable, credit sales revenue. Okay? So we're going to debit accounts receivable, credit sales revenue. Whenever you see sales on account, that means debit accounts receivable, credit sales revenue. Okay, next transaction down is collections on account. Collections on account means that we're getting money, okay? So we know we're going to debit cash, and we're going to be crediting accounts receivable, Okay, so again, the second entry, a very, very standard entry, and that would be another one I'd have in my list of useful journal entries. This is one that you're going to see fairly often. If we collect on account, we're getting cash, and we're reducing the accounts receivable. Okay, now this next item down is going to be closely tied with what we do on Wednesday. Okay, this next item down, item 3, and I want to call your attention to it because it's different than what you would expect. Write-off of uncollectibles. Now, and this is kind of backwards. We're doing it in backwards order. Whenever, as a business, we know that a certain amount of our accounts will not pay us. It's just a cost of doing business. If we restricted to our sales to only those people that we were 100% sure would sell to us no matter what, we're going to be able to sell to our mom and that's about it, right? So so we loosen up the credit standards and we say we'll sell to people that are reasonably sure we're going to pay us. But some people aren't. So we have to recognize each period that of this 100,000 of sales we make this period, some of it we're not going to get paid for. So we're going to put it in an allowance account and we're going to recognize bad debt expense is what's happening. So we estimate every period. We don't know which ones those are. We're just saying of this sales that we have this period, some of it we're not going to get paid for. And that's the sad truth. But we're still ahead in the long run overall. So that's the estimating part, and that's what we're doing in number 4 here. So we're jumping out of order. So that's what's happening in number 4. We do that every period. Now, sometimes as we go along, though, we have these big uncollectible allowance, which is not a specific account. If we knew who wasn't going to pay us, we wouldn't sell to them. So we make this estimate, but sometimes as we go through life, it becomes evident that somebody's not going to be able to pay us because they've gone into bankruptcy. They're done. There is no more money, and that's considered a write-off. Now, a write-off of an account is a specific account or accounts, customers, that we know have gone bad. I mean, they're bankrupt or for whatever reason, they're not going to pay us. So we're assuming they're part of that uncollectible allowance we have, but we want to get them out of it entirely. So what we're going to do for number 3, this is a write-off of an account. Whoops, I didn't. Okay. I thought I had a note written. Okay, write-off of uncollectibles. This is saying we know this account has gone bad, or these accounts. So maybe these are accounts that have declared bankruptcy and there's no money left to pay us. So what we're doing is we're taking that out of our allowance account by debiting it, and we're taking it out of accounts receivable. So when we have an account go bad, like bankrupt, it doesn't impact our financial statement because we've already recognized that as part of our estimate. And we'll talk more about this concept on Wednesday, but this is the weird one. It's a very specific terminology. It's called write-off of uncollectibles. So that word write-off is very specific. That's not estimating our uncollectibles. That's writing off a specific account or accounts that we know have gone bad. And I always keep pointing to bankruptcy, but that's one indication. There's other indications that someone won't be able to pay you. Okay, so that is entry 3. Then entry 4. 4 is uncollectible account expense. They're telling us it's 2% of sales revenue. So, wow, that font got really seriously messed up. That is not a whatever that is. But that's an X. That's a time symbol. Okay. So the 1,030,000 of sales times the 2%. Gives us 20,600. So when we do an estimate of uncollectible accounts expense, it's always going to look like this. We're always going to debit uncollectible account expense. We're always going to credit uncollectible accounts. Okay. Okay. So that brings us to the end of this particular exercise. Now, in my afternoon class today, we're troubleshooting Collaborate with the Collaborate engineer. So we're going to stop here now to make sure we have enough time there to get through the material. So I will see you on Wednesday. We are done. Stop the recording.